Can the positive momentum continue? Joining us now is Kei Okamura. He is Neuberger Berman's portfolio manager for Japanese equities. And Kei, it's great to have you on the show. Given the fact that the Bank of Japan has been hiking, can the equity market continue to power higher?
Hi, thanks for having me on the show, Maureen. So let me break that down to a couple parts. First of all, we do think that the market can go higher, and that's on the back of the fundamentals and the valuations. So on the fundamental side, we have the Japanese economy exiting the last decades of deflation. Inflation is stabilizing. We're starting to see structural gains in wage growth. That's a positive factor. And then on the valuation side, as you mentioned, the Japanese equity market, gained around 26-25% or so this year to date. But then, when you look at the valuation, it's about mid-teens PE, which is a much further discount compared to, say, the S&P or other European equities. So we do think that Japanese equities remain quite attractive. On the other hand, what the Bank of Japan did last week is kind of reflective of this. The economy is normalizing, and I think it's for that reason that the Bank of Japan decided to hike, interest rates by 25 basis points, albeit it's still at 0.75%, which is still very low by international standards.
I realize you're focused on the equity market, but the yen had weakened dramatically against the U.S. dollar after that rate hike and stabilized today. And certainly you've had officials who have come out and basically said they're keeping an eye on this, and that helped to stabilize things. So how closely are you watching currencies, given the ripple effects of that to other asset classes, including stocks?
Yeah, look, I keep a very close eye on currency markets just simply because, it has a big impact in terms of the imported cost of inflation. Also, I just came back from a break from overseas, and it was pretty pricey, especially being paid in Japanese yen. But that being said, when we're investing in Japanese equities in the long term, I think it is important that we are invested in companies that have battle-hardened balance sheets and business models that can weather these short-term volatilities in the yen. So if you take a look at our portfolio, we own companies like Toyota, which is a great company that has localized production in the end markets, such as the one where you're at in the U.S. And that's important because it basically removes the cost implications between the top line and the cost base, and that's usually where the biggest sort of volatility comes from, the currency mismatch. So I think that's an important factor to take into consideration. Be invested in these companies that have gone through various types of cycles and currency volatilities. Those are the ones that will continue to win over the mid to long term.
It's interesting because we've seen fiscal packages help propel markets in other parts of the world. I think about Germany, where defense spending and infrastructure are key parts of those fiscal packages. You're hearing very similar commentary around things like defense spending from Japan's prime minister. Is that part of the bull case for Japan going into 2026?
Yeah, absolutely. Just like other markets, the defense is booming at the moment. Shipbuilding, semiconductors, like previous guest was saying. I think all of these are very, very important themes, and they're part of the core sort of strategic investment package that the government has come to the market with, especially since this newly elected prime minister came to the front scenes in October of this year. What is important is that in the last sort of several years, if we track back, we've been seeing Japanese equities continue to do quite well. And that has to do with the balance sheet reforms and the capital efficiency gains that have finally come through after many, many decades. But now what's even more interesting is what you just alluded to, which is that the government is trying to come up with a growth story. And that's an actually important factor, especially as equity investors. We need that aspect to be more forward-looking investors over the mid to long term.